Welcome all. My name is Samir Bapat, and today we are at session 3. Like we discussed yesterday, today we are going to discuss about fundamental analysis. What is fundamental analysis and what we are going to learn today in this session? Fundamental analysis is finding whether a company is good or bad. Normally, what happens is I will get a message, or normally what people will do, first they will buy, they will hear a news, they will listen to something on WhatsApp or something on Telegram channel or somewhere on TV news or some paper, this company is very good. Okay, they will go and buy the shares of the company, and then that share starts fluctuating, and then their heartbeats also starts fluctuating. Then they will ping someone, either me if they are in the group or someone, and then they will ask, can you just check how is the company? So my recommendation is that before buying the share of any company, if someone says this company is very good, that company is very good, it will take you 5 minutes, just 5 to 10 minutes before you make a buying decision, to just go and verify the past of the company, at least past of the company and the product. So uh, today I'm going to quickly tell you how you can verify the past, whether the company is really good or somebody is selling you just like that. Please remember one thing, uh, uh, like turnaround stories are very few in market. Let's not get attracted to the turnaround stories of a hero or heroine coming from a very poor background, becoming rich, famous. This happens, but in real life, how many of you have seen that in real around you? Have you seen examples? Maybe rare, 1 in 1 lakh, 1 in 1 crore, something like that will happen, that a person coming from very humble background will go to the top. Otherwise, we see normal people doing normal things in life, growing normally. But we have an obsession towards those turnaround stories. So my request is, don't expect those turnaround stories from me, because I am not a fan of those turnaround stories. I don't believe in all those fairy tales. Why? Because I have not seen one. So my whatever I'm going to teach you, it is for the normal stocks. Okay, so if someone tells you, okay, this stock is very good, so you can go and check how the stock is, whether it is fundamentally good or not. Once you verify that and then you buy the stock, the likelihood of you losing money reduces. There is always a possibility of losing money, but if you do a basic check, you will have a less probability of losing money. That is one thing. Second thing is, if you find some company and you want to invest into that, then also you should be doing all these basic checks, so that you will have a higher probability of investment for long term, which will give you good returns. So let's go straight away to the analysis. Okay, so here we have this website. Just let me, this is a screener.in. So you can go, and this here you can see the name. Are you able to see the screener on your share, video share? Are you able to see the screener? Yes. Okay, so this is the website screener.in. I have been using it for last 10 to 12 years. I've become, it's a free website, paid also, free also. Whichever you want to subscribe, you can subscribe. I'm using the free version for last 10 years. Free version is also good enough for our requirement. My requirement is okay with that. For last 10 years, I'm using only free version. I recently have analyzing this Tijori. It is also good. you can use that, but after few usage, it will ask you to subscribe. I have not subscribed yet. I am using it the free version only. So start with the screener.in. Then once you log in, let's say I like I told you yesterday to go through the balance sheet of the annual report of the MTAR. So here in search, if you type MTAR, it will give you a drop down. Click on MTAR. It will open MTAR. Anyway, it is open. Now, how to check whether this company is okay or not, how it has been performing in the past. So straight away scroll down, don't stop till you come to profit and loss section. Okay, so come down straight away to profit and loss section. Here, first thing, it is for last 10 years, they will give sales. Sales, this is the sales in crores. Now, if the sales are going up, then only the profit will go up and then only the share price will go up. Simple, very logical. If the sales is going down, share price cannot go up unless until it's a turnaround story, and it is a fairy tale, but we don't believe in fairy tale for the next 20-25 minutes. So what we want is a normal company growing year over year. So how many of you agree with me that if a company is growing year over year, there is a chance of it growing further in coming years also? It will continue to grow if the product is required by the people. Can I have yes from all of you if you agree with me that if a company is growing its sales year over year, then there is a possibility of it growing year over year next year also if the product is required. So first of all, if somebody gives us a name of a company, okay, this company is very good, go to screener.in, open it, straight away come to profit and loss, see if the sales are growing year over year or not. In this case, here if you see from 2018, it has grown 19 to 20, 20 to 21. Visually also you can see it is growing, and TTM is the projected for this year based on the quarterly results. They are expecting it to go to 635 crores. So is the company increasing its sales year over year? Yes, no? Can you see it? Yes? Okay. So what do we say? Yes. Okay. The company sales is. Now the expenses. Expenses will also increase. If the sales is increasing, then they'll have need for raw material. If you click plus, then material cost, manufacturing cost, employee cost. That will also increase normally. So whatever is the sales increase, all this cost will also increase. That is normal. Nothing should be abnormal. So then sales minus operating profit, there should be a consistent growth in operating profit. This is purely sales minus expenses, operating profit. So second check is the operating profit should increase. So each line item, what I'm telling you, one bird eye view, okay, sales increasing, expenses increasing, okay, operating profit, sales minus expenses, operating profit increasing, fantastic. Here are we seeing it is increasing? Yes, it is increasing. But here, see, the growth here was 184 to 214, but the profit was also 10%. That is okay. Don't look at other income. Other income can come from anywhere, like for the sale of the share, sale of the land and all. Normally what they will do is they will, if the company has to show good profit, sometimes they will bring in some other incomes. That other income should not be very abnormal. 149 normal is okay. Another incomes, if it is abnormal, it may hike the profit. Immediately you will find the TV reporter saying it has given fantastic profit, but maybe they have sold the land and all. That's why some other income might have come, something because of that shares or something. So you should not be very much looking at other income because it has already happened. So don't look at it. Then interest will be paid out from the operating profit, depreciation will be done, and the profit after tax will be left out. So this should be also increasing. Everything should be increasing. If all these things are increasing, then only the shares will go up. Net profit, so then the tax, after tax, whatever is the net profit, it should be increasing. So I'll repeat, sales should be increasing, operating profit margin should be increasing, profit before tax should be increasing, there should be no abnormal other income. If the other income is abnormal, then take it with a, क्या बोलते हैं, नमक के साथ खाना है. So take it with pinch of salt. Sorry, in English they say take it with a pinch of salt. So if other income is increasing, it may be one-off incident, so we should not pay too much of attention here. Then interest depreciation is okay. Interest depreciation should be also consistent, and profit before tax, profit after tax. So if all these 4 to 5 parameters are growing consistently, then the share price will also go up consistently. Here we are creating wealth. Don't be in rush to double your money in 1 month, 2 months like that. It takes time, but anyway, it will give you good returns. So far, so good. Okay, so Vivek is saying expand the sales and you'll get the year over year. This is a good sales growth is 56, 17, 16, 15. If it is 15% plus, it is okay. If the sales is growing 15% year over year and net profit percentage nahi hai kya isme? Okay, so and if the profit is also growing in a 15 to 20% range, still it is good. Your share will also go up 20%. 20% a year growth is fantastic. If you have a share growth of 20% in how much, in 3 years, I think it will double. 3 or 3.5 years, it will, your money will double. And 7.5 years, it will become 4 times. If the company goes on the same path, if you put 1 lakh, in 7 years, it will become 4 lakhs. If the company is growing at the rate of even 15%, profit is growing at the rate of 15 to 20% consistently, sometimes more, sometimes less, on an average 15%, your money will become 4 times in 7 to 8 years, provided the product is needed by people. So this is clear. Once you see the company, you go through this is good. Then you see ROE. I'll explain ROE in detail sometime. But ROE, return on equity, should be 3 years, 5 years, and last year should be greater than 15%. So if sales growth, so see here, now we go one by one. If you come down, once you see the numbers, then you can come down here. Compounded sales growth should be 5 years or 3 years should be at least 30%, 30%. Profit growth should be 30%. Okay, for a good company or for a decent company. Okay, once you have 30% or at least 25%, दोनों ही होना चाहिए, sales growth and profit growth compounded. Then ROE should be greater than 15% for a company to be considered as a decent company for us to invest. Okay, can I go ahead? Can I have yes if I can go ahead? देख लिया profit वगैरह, compounded sales growth, profit growth, everything we went, and then you come down and then look at, okay, which part you want once again? Can you unmute and tell me which part you want once again? I'm not.
Yeah. Can you just explain this part once again? This can you go down compound? Yeah, the compound sale growth and compound profit growth. What you were saying?
See, compound sales growth should be 30% for 3 years or 5 years.
Okay.
That means it is increasing its sales by 30% year over year. It's a compounded
Okay.
growth. Okay. Then you have profit growth should also be 30% and plus. 25 to 30 is okay. Fine. For 3 years and 5 years, it should be 30%.
Okay. Yeah.
Then ROE, return on equity, should be
Yeah.
nearby 15%. 15% is good enough.
Okay.
Fine. Okay.
Thank you.
Right. Just hold on. I'll mute. Okay. Then you come to ratios. Ratios in this, there is a debtor days. Debtor days is in how many days I supplied a material to a customer, how many days he is taking to repay me. In how many days he is paying my money. If I supply him my product, in how many days he is paying me back. Ideally, it should go down. See here for 3-4 years, it touched 154. Now it has come down to 132. Ideally, it should remain same, little fluctuation, or it should come down. When the debtor days is coming down, it indicates that there is a demand for my product. For example, if you see Apple launching any new mobile phone, okay, then there are Apple lovers. What they will do, they will stand outside the Apple store for full night, 12 hours, 15 hours. They will wait for the store to open. As soon as the store opens, they will rush in and take the phone. That is called demand for the product. People, if Apple would have done it, the people would have booked 1 year in advance. कि भैया पहले एडवांस में पैसा ले लो, बट नेक्स्ट मॉडल जो आया वो हमको दे देना. They don't do. They want to create that euphoria that people are waiting for 24 hours, 36 hours, and like that. And that is their style. But let's say some other phone is there. Let's say some maybe 10,000 rupees, 15,000 rupees phone is there. If they launch the phone, they have to do all marketing, advertisement, everything. Then people will say, okay, let me see the review, then I will go. So you can see the demand, right? I'm just giving an example of demand for a product. So debtor days is a sort of indirect measure of a demand of a product. If the product is in demand, then the debtor days will be constant or reducing. If it is increasing, not very healthy. It's not a direct thing to worry, but reducing is better. Okay. Inventory days also should be reducing. Inventory days should not go up like 467. It should be constant or reducing. So that is an inventory day. ROCE, return on capital employed, should again be around 15%. So this is the check. Okay. Coming down, if you see, this is the shareholding pattern. Who is having how many shares? If promoters are decreasing their shareholding, not a very good sign, because promoter is the main person who has faith in his business. Promoters are having faith in their business. If they are reducing their shareholding, not a very good sign, maybe not alarming sign till it goes down below 35%. Promoters shareholding, if it is below 35%, 30%, that means they don't have much hold on the company, right? Somebody else is operating the company, or they don't have much interest in the business. So shareholding pattern, promoters shareholding should be at least 30% plus. So if it is 30% plus, it is okay. It should not be drastically reducing. Here it reduced 47, then suddenly it has gone down by 6%. It should not reduce. Here the FII shareholding has gone up, DII shareholding has gone down recently. So if FII and DII are also having their shareholding, ठीक है, अच्छा company हो सकता है. FII and DII holding is not mandatory. If they are having good, if they are increasing, very good. If they are not having, no problem. DII having, not having, no problem. Don't be worried. Oh, koi kharida nahi. If a company is doing good work consistently, sooner or later, FII, DII will buy it. So once there is there, and public shareholding should be lesser. If the public shareholding itself is very high, then समझ लो कि भगवान भरोसे चल रही है कंपनी. वो कंपनी का कोई there is no one looking after this company. It's just running. Any day it can collapse. So, be aware of that. Once you have done that, then go and see here about what is the key point. What do they do? Okay, this is the brief. Okay, Rajesh has asked, debtor days reduced is good or bad? If debtor days is reducing, it is good. That means the money is coming faster from the customers, right? If I give a product to customer, it is coming. They are paying me faster. Why they will pay faster? Because they want my product. Okay, this is the brief. Sometimes screener will give, sometimes it will not give. So for that, you can go and read here some interesting facts. Like if you see the order book of MTR is 1288 crores, 0.5 crores, 1288.5 crores. Everyone can see it. Manoj, I'll come to the public holding. I'll just finish this point. Everyone can see this order book of 1288.5 crores. That means right now they are having an order book of 1288.5 crores. Now, if you see, normally their sale for this year is 635 crore. Last year 573 crore. That means they are having double the order of their capacity. They were able to do sales of 573 or roughly 600 crore, but they already have an order book of 1200 crore. That is double their capacity. They have work for next 2 years. There is nothing more better than a company having work for next 2 to 3 years. For a shareholder भी ठीक है, चलो काम धंधा है अपने पास 2-3 साल का, right? So that is a good thing. So sometimes you can see the order books. If the order books go into detail, okay, when the delivery has to happen, I'm just giving ballpark figure. Maybe delivery has to happen in 7 years, then no use. If the delivery of those products for which order book is 1288 has to be happen in next 2 years, then it is fantastic. That means they have business for 2 years. So something like that will come up. You have to go through what they do, what they don't do, and then you can decide whether the company is good or not. So this is one way of finding, quickly finding whether the company is quality company or not. So you should listen to news, views, newspaper, everything, but don't fall for the stories they tell. Once they tell their stories, come to screener, go to Tijori Finance, go through the numbers, see what the numbers are saying. They should be consistent for last 5 years. If they are consistent for last 5 years, then look at the story, look at the product, then buy the share. That should be the process. Nothing will go wrong if you don't buy for next 5 days. It is not necessary that someone tells today and you have to buy tomorrow. No. Take your time, 2 to 3 days, analyze it properly, how it is doing for last 4 to 5 days, how it has been doing for last 4 to 5 years. Once you are sure it is doing consistently, then buy. Otherwise, don't buy. I have seen people buying first, analyzing later. Okay. So let me, public holding, Manoj, coming to public holding is the shares held by public, like you and me. I would not prefer public holding much of the shares, right? Percentage should be lesser, the better. If the percentage shareholding of public is greater than 70%, then that means that no one is running that company. Bhagwan bharose hai, right? Right, Manoj? So if it is greater than 70%, no one is taking care of the company. It is just running, and sooner or later the shares will flop. Okay. So that is what I wanted to cover today, and then it gives some comparison, right? Some other companies also You can also see, but mostly it will not give a very good comparison, like not exactly the same field companies. So you will have to do some more research. Okay, so that brings us to the end of what was planned today. What we'll be doing is next week we will go through capital, cash flow. We'll go through the cash flows and some more detail about ROC, ROE, why they are important. Cash flow, ROC, ROE. This is what we are going to do in next. So Monday, Tuesday, we'll complete the fundamental analysis. I hope everyone is going to read the annual report for MTAR, right? So coming days, everyone has promised me. So Saturday, Sunday, it's free. We don't have class on Saturday, Sunday. Next class is on Monday. So everyone is going to read the annual report. Yeah, Bharti, sure. You can go ahead and ask the questions for the falling market. So now the forum is open for the questions. I have allowed you to unmute. Please unmute and ask the question. Yeah, Bharti.
Thanks, Amir. The fundamental analysis is really good. I'm refreshing myself. So basically, the market has fallen so hugely.
Ha.
So I'm a beginner. I'm still very cautious. I listen to all your words of caution.
Ha, ha.
Totally agree with you. What do I do in a falling market? The only strategy which occurs to me is whatever blue chips I've been buying, steadily buy 1 or 2 shares more. But other than this, for a beginner, what do
Ha.
we do in such a falling market? I want to take advantage of this.
See, first thing is don't rush to take advantage of falling market if you are a beginner. Okay.
Okay.
So don't rush. कि नहीं आज गिर रहा है मैं let me buy today. No, because as a beginner we should be more cautious. So I'll tell you one trick. Okay, the trick is you know how to read the charts.
No, I'm refreshing myself again. What you have been teaching us.
So price charts you are not reading right now.
No, not regularly.
No, but do you know how to read?
Yes, to a certain
Basics you
extent.
can see, na? Chart
Yeah,
पे देख सकते हैं ना? Okay,
Ah.
so if not, then wait within 1 week we will be learning that. So I'll just give you the trick right now. You can take advantage for lifelong. So what happens is chart the price fall will you are seeing the whiteboard, correct?
Correct.
So price will go down like this. It will fall. So any blue chip, anything or any company you want to buy, anybody says no, prices are falling, very nice. Go and do fundamental analysis. The price will fall. Don't buy when it is falling like this. Okay.
Oh, okay.
Very rarely it will happen that it will fall like this and recover like this. It's a very rare occasion. If it happens, let it happen. Don't have any ROMO, that is remorse of missing out. Okay.
Okay.
Now, what you have to do is when the price is falling like that, usually the price will fall like that. Then it will move for few days like this. Okay. Then it will go up. Okay. Wait for all this drama to be played out. Then buy peacefully. Your probability of getting stuck in that stock will be lesser. Your earning profit will be more. What happens is people become impatient. Okay, when it is falling, they will buy here. Then it will fall again, they will buy here. Why? Have patience. Let it fall peacefully. Okay. Let it fall peacefully, then it will not go up. V-shaped recovery will not happen. It will move something like that. Wait for it to consolidate for this is called consolidation. Wait for it to go like this, then buy. Correct.
Okay.
As a beginner also, as a expert also, as a super expert also, don't rush to buy. Always wait for it to consolidate.
Okay, bottom out. Okay.
Bottom out. Let it bottom out peacefully. Nothing. It will not go anywhere. Okay. And any blue chip, any company, you should follow some basic rules. Why you are buying that blue chip company? Okay. For example, let's say if you are buying Hindustan Unilever Limited, it's a blue chip company. If you're buying that, then you should be convinced that, okay, I am buying Hindustan Unilever because it is related to roti, kapda, and makan. It will not go out of business. People will use toothpaste, even if there is a corona or anything. People will brush their teeth, take bath every day, and use all the maybe little less cosmetics, but basic thing they'll use. So Hindustan Unilever business will go on in corona also, like that also. Still, it will business will grow as long as Indian growth story is there. Gradually, as people are moving from like as their income levels are increasing, like people, maids are coming to help us at home, their income levels are growing, their kids are getting educated. So Hindustan Unilever business will grow in coming
Grow.
future. It will grow. Okay.
Hmm.
When you say blue chip, why I told all this story is go and review each of your stocks, blue chip.
Okay.
You
Okay.
should be able to tell this story, what I told about Hindustan Liver for each and every share of yours.
Okay.
Okay. If you are not able to tell the story of that blue chip company which is in your portfolio, that means you don't know what that company is doing.
Right. Right.
Then your chances of making losses in those shares is high.
All right.
Okay,
All right.
so every share for this is for everyone, whether they are a beginner or they are expertise or they are for some time in there, whatever share you are having, you should be able to see that share and tell the story of that share. Okay, this share is doing this product. Why this product will go? Like I told Hindustan Unilever story that our mates are working hard, they're educating their kids education, they will be earning more, per capita income will grow. They today they may or may not be using the exclusive soaps, toothpaste like that. Tomorrow they will also buy. So automatically the growth of business will happen. Hindustan Unilever profit will grow, business will grow.
So, hmm. What about I'm going on the basis of what are standard blue chips like Asian Paints,
That's
TCS,
what I'm saying. That's what I'm
Larsen.
saying. If you are not able to tell the story of that company,
Story.
you are
Hmm.
not a long-term investor in that company. You are
Hmm.
buying by the hearsay. We say na,
Yeah.
by
Correct.
gossips. What you
Gossip.
are doing
Correct.
is you are going by gossips.
Hmm.
Don't do that.
All
Don't do
right.
that. Buy Asian Paint. TCS is a good company. Asian Paint is a good company, but you should be able to tell the story.
So give me an example for this thing, Asian Paints, because it's a paint company.
Same like
Uh,
Hindustan Unilever, no? Asian Paint is
people,
painting.
uh, uh,
People will have
people,
more income, that they will need more cleaner, brighter homes.
hmm. Infrastructure also people will be using more
Infrastructure,
paint.
people will go for new homes, they'll need Asian paints.
Okay.
Right?
Okay.
Urbanization,
Good.
you said, yeah.
I really like the way you explain. Very simple and very easy to remember. Thank you very much.
Welcome.
Samiji, this is Sheetal here.
Yeah, tell me.
When you had opened this what is screener.in for the MTAR, it had written वहां पे वो लिखा हुआ था cons, pros and cons होता है एक section. So
हाँ
cons
हाँ
में लिखा हुआ था it's trading 12.6 times its book value.
ठीक है ना.
इसका क्या did not understand.
If they sell, if let's say the book value is, if book
Is the
value
book
is the,
value and the face value same thing?
no, face value is the share. Book value is, let's say, if they sell, company will have assets, right? Asset is your land, your building, your machinery, your raw product, which is there in your factory, correct? All these are assets, correct?
Okay, yeah.
If today, if I go out and sell everything of MTR, all their land, their building, their furniture, everything, for what value it will be sold? Okay.
Okay.
That is called book value.
Acha.
They are able, we will be able to sell everything, their land, all the assets. If we sell and liquidate into the terms of money, what rough shell bata raha hu, I am not from accurately nahi bata raha hu, but mote mote taur pe that is what, how it will be coming as a book value. So whatever is the book value and whatever is the stock trading price, it is 12.6 times hai, wo to hai.
Okay.
So it can be taken as con, but if you understand book value, see, normally when the company goes to liquidation, whatever is book value, that is also cannot be materialized. Okay.
Yeah.
So book value per se, it's okay, but book value is on the books only.
So this is not a con. This is a good thing only. Stock is trading 12.6 times its book value. It's
No,
fine.
don't worry. This book value and all right now, don't worry. Once you
Okay.
start reading other things, I also
Okay.
don't look at this P to B ratio.
Okay. Okay.
Not needed that much. Yeah.
Thank you.
Okay. Welcome. Okay. Okay, so Vivek is asking why Asian Paints. I'm not disputing why she's buying Asian Paints or why TCS. My only request to her was that you should have a story behind that Asian Paints. Why Asian Paints only? Why not Burger Paints? Like that. That's the thing, right? Okay, any other questions we have? PE should be less than 20. No need. Such PE is a very misguided ratio. It's not worthwhile to look at. Okay. Not very much worthwhile. Lower the better, but don't get carried away by PE. I know a lot of people sell the shares by PE. Don't get carried away by PE. Okay. Any other question? Yeah, Krishnamurthy ji.
Yeah, Samirji, good evening. Yesterday's session, sorry, missed it. Have you uploaded yesterday's session?
No. After today's recording, yesterday, today, and Trading View playlist, I'll be sending it all together. By tomorrow morning, 10, I'll send everything together.
Okay, all right. Yeah,
Okay.
thank you.
Yeah, Rajeshji, you wanted to ask something?
Yeah, Samirji, I just wanted to know,
Huh.
is there any tool available to
Huh.
check the market share, particularly just now you spell about the Asian Paints
Uh-huh.
or Hindustan Lever. These
Uh-huh.
company, they have a competition also in the market. For example, Hindustan
Uh-huh.
Lever, you
Uh-huh.
cannot give a guarantee that year on year it will grow.
Correct. Absolutely right.
So like that, is there any tool
no,
available?
I have
So
not
I can see the Hindustan Lever today's market share, last year market share, and their new upcoming products or new things are coming.
Now,
So that I can
upcoming product will be let's see. Okay. Let's see. I have not looked at from that point of view. Hindustan.
so I am also beginner in
No,
this
no,
field,
no.
but I have some logic over there.
Yeah, definitely. Your question is very valid and very interesting. Let's go to Hindustan Unilever. Let's go to investors. क्या हो गया? I don't know why it has stuck. Sorry. Okay. So your question is interesting. I have not come across a website which will give directly like that. But if you go and see the annual reports of the company, normally they will mention that this is our market share, which we have to take with a pinch of salt. फिर भी झूठ नहीं बोलेगा वो लोग. So they will tell, okay, this is our market share. This is what we see in future happening in the world. So that's why I said go and read MTR annual report. They give a lot of information about that sector. So first 10 to 15 pages, they will give the entire scenario, what is happening in the globe for their products. It will be little glorified, reduce it by 50%. Second thing is market share. They will tell you their market share, how it is happening. So you can cross check with their competitor, what their competitor is saying. So something like that we have to do. Otherwise, websites are not available as far as I know.
Okay.
Might be available. I have not come across. If you come across, please do share with me also.
Yes,
this
sure,
is
sir.
a very interesting thing what you have brought up and very good to compare. Immediate comparison between the peers. कि क्या चल रहा है. So I will also search. If I find, I'll post in the group. If you find, send me. This website gives some comparison. It will be interesting for everyone to know.
Yes, sir.
Yeah.
Definitely. Yeah. Thank you. Thanks.
Welcome, sir. Okay. Yeah. So, research teams will give some Kotak research or something. They will also give. So it is better. So my only request or one thing I'm insisting is, don't buy and do the research. Let's say someone says कि नहीं ये share is very good and all. Don't rush to buy. Take your time. Take 1 hour, 2 hour. Go through the financials. Go through क्या product बना रहा है. Is it required in future or not? And then don't go after the turnaround stories. See, those turnaround stories are turnaround for few people only who have already bought that share and selling it to you. It may not be a turnaround for the company. So don't fall for quick buck. What I am trying to say. Do analysis and then buy. You will make money. Everyone, even I'm saying, even if you are able to find a company which is growing 20% year over year, profit growth, the share price will also go up. Your money will become 4 times in 7 years, 8 times in 10 years. Okay, simple, very simple mathematics. If you can just see Hindustan Unilever stock, what it was 20 years ago, what was the price and what is the price today. And if you go and split and everything, if you do bonus share, split everything, you'll find that one stock was good enough. Okay, great. So if there is no other question, we can call it a day. See you all on Monday. I'll share all the recordings and TradingView watch list. I want everyone to practice TradingView, whoever are new people in the webinar or they don't know how to use TradingView. Please go through the playlist and practice along that. So thank you so much. Thanks for joining today and taking out your time and joining today. See you all on Monday, 9 o'clock. Thanks.